Friday saw a major sell-off in the market on news that the US is going to tariff Chinese goods a lot more because of a dispute over rare earth mineral exports. So does that mean we're on the edge of a big market sell-off, or is this just a little blip in the upward trend? Well, I'm going to answer that question, but I'm also going to teach you how to answer that question for yourself. So as I said, President Trump announced new tariffs on China on Friday, and this caused the market to move down 2.7% for the S&P 500 and about 3.5% for the NASDAQ. Well, let's take a look at the chart of the S&P 500, and I will begin by showing you what happened the last time there was a tariff dispute. That was in here. This is when the US really started to tariff a lot of different companies around the world. But the discussion of that started here, and that's very similar to what we see right there. You can see that we had an upward trend, we broke that, and we didn't go down right away. We spent some time waffling around, and then it started to gather momentum to the downside. And that's really the important lesson here, is typically big sell-offs happen slowly, and then they end quickly. So you can see it slowly, and then boom, the big quick drop here. By the time people are panicking, it's usually time for a bottom. It's the early signals that we have to pay attention to. And so my expectation is, what we want to watch for is that this upward trend line stays intact. We're right at that upward trend line now. We may bounce back next week. We may move a little lower. Now that's the daily time frame. And this is appropriate if you are an investor in stocks. If you're a long-term investor, then the 3-year weekly time frame is appropriate. So there's the 3-year weekly. And again, you can see little blips in the upward trend. That's very normal. But when you make a double top, when you break the upward trend line, then you get the more significant sell-off. Well, notice that this looks kind of like this, kind of like this, kind of like this. It's a little blip in the upward trend. We haven't really started to break down from a falling top yet, unless you look at the very short-term chart. And that's where we see that this upward trend line has been broken. So in the short term, we have reason for concern. If you're looking out the next few days, yeah, there's probably going to be a fair bit of volatility in the market. We may go up, we may go down, probably more likely to go down after a little bounce back, perhaps early in the week next week. But that's okay if you're a longer term or even a medium term trader. If you're a day trader, then you want to pay attention to that shorter term time frame chart. And that's the appropriate thing to think about. You match the time frame to your time frame. If you're a long-term investor in the market, you've been holding stocks for months or years, then don't get caught up in what happens for one day. Think about what's happening over the course of a month. How is that trend starting to change? And in that time frame, we're still fine. In the short-term time frame, yeah, there's going to be volatility. And if you are a short-term trader, maybe you trade options on some of these large cap tech stocks, well, you might want to be a little bit careful because it looks like there's going to be a fair bit of volatility. So now let's dive into the overall market analysis that I do every week. And let's go through not just the S&P 500, but the NASDAQ, the Dow, and all the other markets that we follow. So remember, if you're subscribed to the channel, I do this analysis every week. And you don't have to try to plan for when the next crash is coming, because I'll tell you what the charts are telling us. So make sure you're subscribed to the Stockscores YouTube channel here. All right. So let's dive back into the chart here for the NASDAQ. And there you can see the upward trend line in the very short term was broken, but the long term, if we go to the 3-year weekly chart, what you will see is that we're still fine. We're still inside this upward trend. It's relatively strong. It's normal in upward trends to have little blips. It's only when we start to break that upward trend line in the long-term view that we need to be careful. So short term, yeah, be cautious. Longer term, we're still fine. Let's take a look at the Russell 2000 small caps. And on the daily time frame, breaking the upward trend. On the 3-year time frame, which is appropriate for that longer term trader, it sort of looks like what happened right here, which we bounced back from quite nicely because we hadn't made a falling top. If you look back here, we made a falling top right there, and we broke the upward trend line there, and that led to the big panic part of the sell-off. We're not there yet. Let's take a look at the Canadian market, T.XIU. 3-year weekly time frame. fine, but probably going to pull back a bit because the chart has run away from its trend line, and when price runs away from the trend line, it usually comes back to the trend line. So we may see a little bit more selling on the Canadian market, and I'll show you an important chart in just a moment. But let's look at the 1 month chart here. And in the short term time frame, when I say 1 month, this is just the last month, 2-hour time frame. And what you can see is that the upward trend has been broken, and there are some little falling tops building here. So it's not unreasonable to think we'll see a little bit more weakness in the short term. Let's move along to gold, which is a very important chart for the Canadian market because there's so many mining stocks in Canada. And this market has had a great bump to the upside. I, of course, went bullish right there when we broke out from this rectangle consolidation. We've been moving up ever since. A little bit of blip on Thursday, but still relatively stable, although I do think the gold market is quite risky. I don't see a reason to sell the gold market today. How about oil? Well, oil hasn't kept up with gold. You can see it's building falling tops, which is a sign of pessimism. Look at the stock score, a lot lower than these other markets, and that's now because we're breaking down through support. I think oil more likely to go lower than higher. Look at the currencies. US dollar had a little jump to the upside this week. You can see there building rising bottoms, so starting to get optimistic. You see the sentiment stock scores starting to move up. I did a video all about the stock scores on Saturday. If you want to take a look at that video, just go to the Stockscores YouTube channel. All right, how about the, what are we missing here? Bitcoin. Bitcoin's selling off this week, but still, if we look at that 3-year time frame, still in an upward trend. I would say the trend is losing momentum. And on the 1 month time frame, we built a little falling top, and we broke this upward trend line, so we could see some more weakness in the short term for Bitcoin. Finally, TLT, which is our bond market chart. You see a nice jump in the bond market, which implies that investors think that there will be a drop in interest rates, and that is going to be good for those small cap stocks and those other sectors of the market. So my ratings then, well, I've lowered it short term to neutral for the US large cap, NASDAQ, small cap, and Canadian stocks, but still long term bullish. I think we want to be watchful for a further breakdown in the market, but we don't want to panic just yet. Gold bullish on both time frames. Oil bearish short term, long term neutral. US dollar bullish in the short term and long term neutral. Bitcoin dropped it to neutral this week and bullish long term. And bonds, I've raised it to bullish in the short term and neutral in the long term. All right, let's go on to the trade of the week. And with the volatility in the market, it was a little drier than usual on Friday. But I want to show you a swing trade that I love to do. It's called Alpha Echo. It's a strategy I have. If you want to learn more about some of my strategies, I'm doing a 4-part educational series on Stockscores.com. It's entirely free. It starts not April, obviously. October 18th, I believe. You can go to the Stockscores web. Let's just dive into the Stockscores website and figure out where that is. If you go to the home page, scroll down the page, October 21st. There we go. So my simple approach. So this is the first one. I'll teach you theory here. I'll teach you my approach to investing here. I'll teach you my approach to day and swing trading, and I'll show you my tools and indicators and all the things that I use to trade the market in that last session on Saturday. It's all free. You can register for that at Stockscores.com. All right, let's get into the trade of the week now. And so this is called the Alpha Echo strategy. And the whole idea here is stocks that were hot, and then they go quiet, and then they start up again. So this stock had been hot before this chart, and it was drifting lower for a few days. And then it came alive with my good old action candle indicator. And if you've been watching my videos for a while, you'll know all about the action candle indicator. It tells us when there's abnormal buying in a stock, abnormal price action, abnormal volume. It uses statistical analysis to identify that. So you see here there's a pink, yellow, and red dot all in that candle. And the volume starting to increase. So that was our signal to jump on the stock. And in just a day, we went from here, $1.80 when the signal fired, to hitting $3.18 before it started to sell off. So that's a nice little trade over the course of a few hours as a swing trade, using nothing more than just simple statistical analysis of markets to identify situations where people are buying the stock aggressively. There's always a reason, and we don't have to know the reason. We just follow what others are doing. Hope you've enjoyed this week's Stockscores Market Minutes. And if you have, do me a favor, click on that like button, subscribe to the channel. Make sure you're registered for those free classes that I'm doing starting October 21st. I will see you there. And as always, trade well.